For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition. Welcome back to The Simple Side.
The stock market is a device for transferring money from the impatient to the patient. Little quote from Warren Buffett for you there, and happy Saturday, simple investors. Let's talk about some quick updates before we get into this week's returns, which again outperformed the S&P 500. If you like quick, short-form stock updates and analysis daily, check out my daily newsletter, thesimpleside.substack.com. You can see a link on this newsletter that brings you to The Simple Side Daily, which costs $1 a month or $10 a year. But most of the newsletter is free, so go and subscribe there and check that out. Again, there's a link in this newsletter, and you can find this newsletter on my website, thesimpleside.substack.com. Also, a quick reminder, paying subscribers have access to a $2,000 giveaway in December. These giveaways help me reduce my tax bill, so please go and subscribe and get access to get this $2,000 giveaway. I love giving this stuff away. It gives back to my community, and it also, like I said, takes away my tax bill. So works well for all of us involved. Also, I want everybody to know that the homepage of the website has been rearranged, and I'm in the process of adding any missing posts. I now have the available sections. We've got the Saturday Sendouts tab, which is this newsletter, this podcast. That's got its own section. We've got the Flagship Portfolio tab, which has its own section now, and then the Contrarian Trades tab, which has its own section as well. These, of course, the Flagship Portfolio is the longer-term holding portfolio that we have. The Contrarian Trades portfolio is anywhere where I see a contrarian bet to be made in the market. And then, of course, the Saturday Sendouts tab, like I said, is this newsletter. I will soon also be doing a podcast question and answer to answer any and all questions that people have emailed me or sent to me with the link that you can find below. And if you're a paid subscriber, you can get access to it all, including Saturday Sendouts, the Flagship Portfolio, Contrarian Trades, and anything else that I send out. So go paid and get access to all that now. If you have any questions, feel free to send me an email or reply to this email, or you can click this button that you see in the newsletter. The email address is thesimplesidenews@gmail.com. Again, that is thesimplesidenews@gmail.com. All right, let's talk about past performance. How did we do last week? I just wanted to give a quick update that in last week's newsletter, I had the performance miscalculated. We're still outperforming the S&P 500, so don't worry about that. But I had a formula in an Excel sheet where I'm tracking all these returns that was set up improperly, and it changed a percentage from like 1 point whatever to whatever last week's return was, which I believe was 5.33. So I had a paying subscriber reach out to me and just notify me that he had different values for things. And so I have since corrected that, and everything should be back on track. Like I said, we are still outperforming the S&P 500 on a week-to-week basis. Over the past 17 weeks since we started tracking this, weekly, the SPY has averaged a 4.83% return, whereas we have averaged a 16.55% return. That translates into the SPY averaging a 14.77% annualized return, and of course, this newsletter averaging a 50.64% annualized return. So these obviously represent since July 20 of this year when I started sending out these weekly picks. And like I said, the SPY has been no match. I do understand that there will be a reversion to the mean for me eventually, but that's why I have the Contrarian Trades and the Flagship Portfolio updates in this newsletter as well, so that you can keep track with those that are much longer term and have been outperforming in the past. I do want to remind you I spend countless hours a week dedicated to finding the best stocks for your portfolio and mine, and I'm happy to continue to do it. You can find every newsletter dating back to the first time we sent one out, July 20th, by clicking on this link in the newsletter. All right, and if you want to see a week summary of everything that has happened so far, from week 1, July 20 to July 27th, all the way until now, November 16th, you can go and see a picture of that in the newsletter. All right, let's talk about what we're going to be reporting on today. We've got politician trades, we've got a politician stock highlight, we've got insider trades, an insider stock highlight, executive trades, and an executive stock highlight. And then, of course, paying subscribers have access to mergers and acquisitions, top investment ideas, the contrarian bets portfolio, the flagship portfolio, and now a new micro cap picks portfolio. This isn't going to be added into the weekly, the weekly newsletter, the weekly tracking of performance, unless otherwise stated. But I had a paying subscriber reach out to me and ask if I could do a micro cap pick. And so ask and you shall receive. We're now doing the micro cap picks. So check that out. And then, of course, we have expected stock movements from options trading. All right, let's get into politician trading. So we have our two ETFs, NANC and KRUZ, Democrat and Republican tracking trading ETFs. Nance is down 2.76% this week, up 2.72% this past month, and 28.8% year to date. Cruise is down 2.11% this week, up 0.97% over the past month, and 17.8% year to date. And the fuel behind those returns have been 17 politicians who have made 216 trades, investing over $3.69 million in the market over the past 30 days. I went ahead and combed through all of these recent trades, and I noticed one trend over the past week or two, which have been buys. They've come from all over, and the most have come from Marjorie Taylor Greene, who seems to be extremely active in trading these past couple of months, or even really years. She alone in 2024 has bought over $3.25 million worth of stock and sold something minuscule like $65,000 worth. So she's been doing tons and tons of buying. Some of the main industries that she's been putting money into include cybersecurity and energy companies. So I'm wondering if maybe she knows about the data center and AI trades article we came out with last week. The other, all of the 5 most recent politician trades that have happened here have been all from, Marjorie. Miss Greene, she bought Berkshire, Blackstone, Dell, FedEx, and Goldman Sachs. All for relatively small sizes between $1,000 and $15,000 worth. And all these trades happened on November 6th. And they were published on Monday, November 11th. So lots of trades happening there, but nothing really worth watching in particular. The insider trading report that we have this week, following ticker symbol SURE, is up 4.29% this week, 4.36% this month, and 17.97% year to date. Our insider stock highlight for this week is Green Brick Partners, ticker GRBK. The buyer was David Einhorn, a hedge fund manager at Greenlit Capital. He manages $2.4 billion, and his top holdings are GRBK, CEIX, BHF, and HPQ. Now, since September 30th, Einhorn has underperformed the SPY index by almost 6%. So their recent purchase doesn't intrigue me, just based on their past performance. That being said, in my stock rating system, I rank the stock at a 9.1 out of 10, and their discounted cash flows valuation says the stock is undervalued by around 13%. In the short term, I think the stock is actually overvalued, believe it or not. I have a couple of other models outside of a discounted cash flows that show the stock being overvalued. And in the short term, I don't think it's going to perform well. Of course, I'm talking about Green Brick Partners here, but in the long term, I think there's opportunity for long-term gains. If you're looking at the stock for the long term, it might be worth something diving into a bit more. But for this weekly newsletter, I'm going to put it on the watch list. I just don't know if I can. I don't know if I can really see a great performance over the next week. For those of you that don't know, watch list stocks are ones that I see as buys, but I just don't have full conviction to put them in the buy category. Some of the other large trades for this week were EchoStar Corporation, which Charles Ergen put $43 million into. The stock is trading in the middle of its 52-week range. We've got Oscar Health, ticker OSCR, trading in the middle of its 52-week range. Thrive Partners put about $14 million into that stock. We've got Coupang, ticker CPNG. And we had Green Oaks Capital Partners put $21 million into the stock. It's trading on the higher end of its 52-week range. And then we've got Noble Corp, who APMH Invest put $12 million into. If you remember last week, they were our number one buyer. also buying Noble Corporation, so that might be something worth looking into. We're also going to cap this off with our executive trading report. We don't have a ticker to follow here. If you know one that you would like me to follow, an ETF that kind of tracks executive trading, let me know. I'll add it in. But in our top 5 reported companies, we saw ownership grow by over 85%. The largest increase came from a director at First Keystone Corporation, ticker FKYS, and they increased their ownership about 31% at a purchase price of $16. The more stunning buy this week, however, came from the director of Mativ Holdings, ticker MATV. The stock is on a tremendous bearish run, and has been for around 3 months now, down over 33% over a 3-month period. And I think the stock is significantly undervalued right now. My model puts the stock at a 35% discount, and analysts have the stock undervalued by over 50%. However, I do have a problem. MATV has horrendous growth. And when I say horrendous, I mean really bad. Their 3U revenue growth rate has been 2.5%, which is quite poor. But where it gets really bad is the 3-year earnings per share growth rate, which is sitting at negative 35.4%, a 3-year free cash flow growth rate, which is sitting at negative 43.7%, and a 3-year book growth rate of negative 5.5%. And all of these are just poor numbers. And so in this instance, I don't think the risk of poor growth outweighs the reward of great value. And I would need to see a major turnaround in the stock's financials to indicate a buy opportunity. That being said, given the huge disparity between the stock's underlying value and the price, I'm going to put it on the watch list. Too risky to constitute a buy for me, but a possible opportunity in the short term. There are a couple other executive trades to follow here. One of the other larger ones being Koya Therapeutics. The CFO just bought 26% growth in that company, so it might be worth something to look at there. But let's get into investing for next week. I'm not going to go through and read all of these. Of course, this is for paying subscribers only, and the podcast just does a quick cover of politician, insider, and executive trading. But I just want to remind you that information that's held down below this typically costs hundreds a month. I mean, maybe thousands a year. And I'm doing this for $200 annually, doing all the analysis for you and just providing you all of that sweet data. With our current predicted annual returns, again, from earlier, that was 50.64%. That means that a $400 investment in the stock market pays for the subscription. And that doesn't even factor in the contrarian trades or the flagship portfolio returns that we've experienced over the short term here. Now, of course, paying subscribers can look at this TLDR summary, which shows all the buys and the watch list stocks that I have for this week. They can also look at the mergers and acquisitions news, the top investment ideas, and all of that great stuff. I basically did a reconfiguration of how the top investment ideas is set up, and I put 3 stocks on there and kind of did more of a growth, profitability, momentum, and valuation ranking for you. So go and check that out. Let me know what you think. The contrarian trades, I'm going to talk about HIMS again, and then that SMR article that I sent out last week on around Wednesday, I think. We're also going to talk about data centers and energy and just how those stocks that I sent out, the 14 stocks from last week, how they have performed so far. The flagship portfolio is sitting at a total return of 34.41% year to date. That has been crushing to both the S&P, the NASDAQ, the Dow, the iShares Russell 2000. I mean, to everything. We're up, basically over 10% on the highest index and around 20% on the lowest index. So go and check out that flagship portfolio. And now we get to talk about microcap finds. So I've got 4 stocks, I believe, in here for you. All of them have market caps between $5 million and $50 million. And I just look at some of the sentiment, whatever you want to call it, surrounding these stocks, the why buy reasons, and then the why not buy reasons. And so you guys can go and check these out and just see. I give a final opinion, bullish, bearish, neutral for all these stocks as well. So you can go check that out and see what your opinion is and look at buying some of those. I'll look into next week tracking how these performed over the past week and just see what the total returns have been. And then, of course, paying subscribers can go and check out the implied options price movements. It's been a quick one today. I try to kind of rush through things. I feel like I'm getting this out a little late. It's around 12:04. I like to send this out around 10, 9 in the morning. So enjoy all of this. Again, reach out to me, thesimplesidenews@gmail.com, and find my website, thesimpleside.substack.com. All right, we will see you next weekend.